Think of a regular bank, the place you go to deposit your paycheck or get a loan. Now picture that bank but much bigger, with branches all over the world. That's the basic idea behind an international bank. These financial giants help businesses and individuals navigate the complexities of the global marketplace. They offer a wide range of services, from simple currency exchanges to complex international trade financing. International banks are essential to the smooth functioning of the global economy. They facilitate trade, investment, and capital flows between countries, making the world a more interconnected place. International banks are like the bridges connecting different economies. They handle a wide range of transactions that cross borders. One of their main functions is facilitating international trade. Imagine a company in the United States wants to import coffee beans from Brazil. The international bank helps to make sure the payment goes through smoothly and securely. They also help businesses manage the risks associated with currency fluctuations. Beyond trade, international banks also play a crucial role in foreign investment. They help companies invest in projects overseas, and individuals manage their money across borders. This is all part of what makes the global economy tick. Have you ever sent money to a friend or family member in another country? Maybe you used a service like Western Union or MoneyGram. International banks play a big role behind the scenes of these transactions. They use a system called SWIFT, which stands for the Society for Worldwide Interbank Financial Telecommunication. Think of it like a messaging system for banks. SWIFT allows banks to securely send and receive information about financial transactions, ensuring your money gets where it needs to go. It's a complex process, but international banks have sophisticated systems in place to make it happen quickly and efficiently. This is just one example of how they make global finance work. You might be wondering how international banks make money. It's a complex system that goes beyond just the basic services you see every day. After all, they're providing a lot of services, from simple transactions to more complex financial solutions. One way is through fees. These fees can add up quickly and are a significant source of revenue. Just like your local bank, international banks charge fees for things like wire transfers, currency exchanges, and account maintenance. These fees might seem small individually, but they accumulate over millions of transactions. But fees are only part of the story. There's much more happening behind the scenes. International banks also make money by lending money and earning interest. This is a major part of their business model. They provide loans to businesses and individuals all over the world, helping to fuel economic growth and development. Financing everything from new factories to home mortgages, these loans are essential for various sectors. They also invest in a variety of assets, diversifying their income streams, such as stocks, bonds, and real estate. These investments are carefully chosen to maximize returns. These investments generate returns that contribute to the bank's profits. The success of these investments can significantly impact the bank's financial health. So it's a combination of fees, interest income, and investment returns that keeps these financial giants afloat. Each component plays a crucial role in their overall strategy. These banks operate on a global scale, managing complex financial networks and ensuring they remain profitable in a competitive market. Their ability to adapt and innovate is key to their success. Section 5. Real-world giants, a glimpse into global banking. In this section, we will explore the vast and intricate world of global banking, shedding light on some of the most influential institutions that shape our financial landscape. Some names you might recognize in the world of international banking include HSBC, Citigroup, and Deutsche Bank. These banks have established themselves as pillars of the global financial system, each with a rich history and a significant impact on the economy. These are just a few examples of the many institutions that operate globally. There are numerous other banks that play crucial roles in different regions and sectors, contributing to the interconnectedness of the global economy. Each bank has its own specialties and areas of focus. For instance, some banks might concentrate on retail banking, providing services to individual customers, while others might focus on corporate banking, catering to businesses and large organizations. Some are known for their expertise in trade finance, facilitating international trade by providing essential services such as letters of credit and trade loans, while others are major players in investment banking. These institutions help companies raise capital, manage assets, and navigate complex financial markets. They all share the common goal of connecting businesses and individuals across borders. By offering a range of services, they enable economic growth and foster international collaboration. These banks have a vast network of branches, ATMs, and customer service centers, ensuring that their clients have access to financial services no matter where they are, and online platforms that allow customers to access their services from virtually anywhere in the world. With the advent of digital banking, customers can now perform transactions, check balances, and manage their accounts with just a few clicks. This global reach is what sets them apart from traditional banks. Their ability to operate across multiple countries and continents makes them indispensable in today's interconnected world, providing stability and support to the global economy. Section 6. Currency exchange, your money, their money. Let's say you're planning a trip to Europe and need to exchange your US dollars for euros. You'll likely go to your bank or a currency exchange kiosk. International banks play a crucial role in making this happen. They act as intermediaries in the global currency market, facilitating the buying and selling of different currencies. This market operates 24 hours a day, 5 days a week, ensuring that businesses and individuals can access the currencies they need when they need them. International banks use sophisticated trading platforms and algorithms to manage their currency positions and make a profit from the spread between the buying and selling prices. Section 7. Managing risk in a global market. Operating in the global marketplace comes with its own set of risks. These risks can be complex and multifaceted, requiring a deep understanding of international finance and market dynamics. International banks have to manage these risks carefully to protect themselves and their customers. This involves a combination of strategic planning, advanced technology, and skilled personnel. One of the biggest risks is currency fluctuations. The foreign exchange market is highly volatile, and the value of currencies can change rapidly due to various factors such as economic data, geopolitical events, and market sentiment. The value of currencies can go up and down, and this can impact the profitability of international transactions. For instance, a sudden drop in the value of a currency can lead to significant losses for businesses engaged in cross-border trade. Banks use hedging strategies to mitigate this risk and ensure that they are not negatively impacted by sudden movements in the market. Hedging involves using financial instruments such as futures, options, and swaps to offset potential losses. Another risk is credit risk, which is the risk that a borrower will default on their loan. This can be particularly challenging in a global market where economic conditions can vary widely between countries. International banks carefully assess the creditworthiness of borrowers and use collateral to minimize their losses in case of default. They employ rigorous credit assessment processes and often require borrowers to provide assets as security for loans. Section 8. Financing the future loans and investments. International banks play a crucial role in financing economic growth and development around the world. They provide loans to businesses of all sizes, from small startups to multinational corporations. These loans are used for a variety of purposes, such as expanding operations, investing in new technologies, or simply managing day-to-day cash flow. International banks also invest in infrastructure projects, such as roads, bridges, and power plants, which are essential for economic growth. In emerging markets, international banks play a particularly important role in providing access to capital and supporting economic development. They help to bridge the gap between developed and developing countries. Section 9. The human element, expertise, and relationships. While technology plays a vital role in international banking, it's important to remember that this is still a people-driven business. International banks employ thousands of people worldwide, from financial analysts to relationship managers. These professionals possess a deep understanding of global markets and the complexities of international finance. They work closely with clients to understand their needs and provide tailored solutions. Building strong relationships is crucial in international banking. Banks often have long-standing relationships with their clients based on trust and mutual understanding. Section 10. The importance of international banking. International banks are essential to the smooth functioning of the global economy. They facilitate trade, investment, and capital flows between countries, making the world a more interconnected place. By providing access to capital and financial services, international banks support economic growth and development around the world. They help to create jobs, improve living standards, and reduce poverty. International banks also play a vital role in promoting financial inclusion by providing services to underserved communities and individuals who lack access to traditional banking services. Section 11. The future of global finance. The world of international banking is constantly evolving. New technologies such as blockchain and artificial intelligence are transforming the way banks operate and interact with their customers. Fintech startups are also challenging the traditional banking model, offering innovative solutions and disrupting the industry. International banks are adapting to these changes by embracing new technologies and partnering with fintech companies. The future of international banking is likely to be characterized by greater competition, increased innovation, and a continued focus on serving the needs of a globalized world.